The Nigerian Exchange Limited (NGX) is on a record-breaking streak. Now, on Monday, the all-share index surged to an unprecedented level of 68,279.14, representing a 1.11% increase and surpassing the previous record of 66,371.2 points set on March 5th, 2008. Now, this new surge follows a prior all-time high of 66,490.34 points that was set last week, Tuesday. As a result of the surge, market capitalization experienced a notable increase of 411 billion naira, closing at 37.369 trillion naira, compared to the previous figure of 36.958 trillion naira. This pushed the year-to-date return to an impressive 33.22%. Does the all-share index have more record-breaking left to do? Joining me now is the man who called it last week, Oladipo Ajayi. He's the head fixed income and FX at Chapel Hill, Denham. Oladipo, I think I should start calling you Prophet Oladipo at this point in time because you called it when we talked about this last week. So let's start with that. What were the signs you saw that showed you that the NGX had another record breaker in its path?
Yeah, some of my reasons is there's still a lot on the table that market has not fully internalized at that particular point in time. There's the merger between Dangote Sugar and NASCON on the table. There's the purchase of 60% in Abuja Disco by Transcorp. And you also, market is also still expecting results from some of the major banks. Tier 1 banks like GT Bank, like Zenith, like Access Bank. And also, market is yet to also get results from one of the big Tier 2 banks, which is Fidelity Bank. So I was knowing fully well that most of these banks, they are going to book huge exchange gains. So I'm of the view then there was that market will actually still rally. Immediately, the result of some of these companies actually hit the market. And that's just exactly what happened when their results were released to the markets.
So let's look at a breakdown of what the market data is showing us. So it shows us that the banking index is at the forefront, adding about 5.65% overall. This is followed by consumer goods, once again, which came up with just 1.57%. But on the flip side, we also saw that the insurance and industry index actually faced some losses. So let's look at the losers right now. What's happening with insurance and industry index?
Yeah, firstly, let's look at the insurance sector. Insurance sector is not fully developed yet. That sector also still needs the regulators to actually do more, to actually help the stakeholders in that sector. Insurance sector is not a sector where that thrives like any other insurance sector globally. People don't actually patronize their services like that, and I also think that the government also needs to do more in terms of actually forcing Nigerians to actually take up insurance on some of their, to actually mitigate some of the risks that actually ended up crystallizing. So on their part, I feel that NICON still need to do a lot, and also the merger of most of these companies is still long overdue. They need to consolidate into one strong insurance company that can actually meet the obligations of people. And I remember before the bank consolidation, then we have the law of banks. Then we have the law of banks. We have close to over 90 banks. But one thing is that we just have 90 banks, not 90 strong banks. And I think the same thing needs to actually be applicable in this sector. They need to find a way to actually force most of these, increase the capitalization, so as to ensure that most of these insurance companies will actually match. And by so doing, they will be able to actually meet the services of people that actually want to actually that requires their service. And I think that needs to be done. On the industrial sector, we cannot remove the fact that the FX crisis is one of the things that actually hampered that sector, because most of them, they actually are exposed to exchange volatility. And most of these stakeholders in this sector, they actually book a lot of exchange losses. And that's one of the reasons why we saw the huge drop in that sector.
Highs that we're seeing. What do you think is telling us about the state of the market? And is it also something that we can say could be telling us about the state of Nigeria's economy, even though for many intents and purposes, and if you ask the average Nigerian, the economy is in the doldrums right now?
You know, one thing about market is that market is a fortune teller. It tells you what will happen. It tells you because, like I rightly mentioned the last time, I said that market don't trade actual, market trades sentiments. It means that market trade ahead of the economy. So what is currently happening in the market is the next thing that should happen in the economy. Because if you notice very well, the rally and every other thing that we've seen in the market started majorly post the swearing in of the current administration. And one thing that actually allowed market to thrive is the right policy. And this right policy is actually one of the reasons why markets actually, we are seeing this huge jump and interest in our market. As we speak, the participation of in the market currently by foreign investors is not even up to 10%. It's majorly by local participants. So now imagine when foreign investors will eventually come to the market. So you can imagine what kind of rally we'll still further see in the market. As we speak, we will get to a level where we'll see market moderate, where we'll see people come to the market to take profit. But that does not necessarily mean that the fundamental has changed, because in no time we'll still see further outside as foreign investors will actually come to the market.
So let's talk more about investors right now. You've said foreign investors, but in the conversations I've had, a lot of people have pointed to local investors really being the ones to prop up the markets. But overall, how do you think these record-breaking feats, especially back-to-back, will influence the activities of investors and traders in the coming days and weeks?
One thing about such feats is that he actually reinforced the confidence in the Nigerian market. As we speak, despite the fact these high prices that we are seeing, yet most of these stocks, they are still on the price when you compare them with their peers, maybe in African zone. Most especially if you look at the price to book of most of these Nigerian banks and compare it to other African banks, you find out that we are heavily underpriced, and it still seems that there's still a lot of headroom for most of these things. So if you look at that category, just like what you mentioned, just to be like I said earlier on, that these activities majorly by local guys. And one thing is that when the local guys are the one actually participating in the market, you don't tend to see their huge job because what they do is that they invest for a long time, unlike foreign investors that come in and actually take profit and move to another zone whenever they see another opportunity in those other zones. But now, because the market is majorly dominated by local investors, so what that means is that the gain we are currently seeing will likely stay longer than people would have anticipated. And another thing also is the fact that he has told us that market is you don't look at market in the short time, you look at market in the long time. The fact that we broke the record that was set in March 20, 2008 tells you that no matter the volatility you see in the market, when you're investing in the stock market, you look at the long-term view, you don't look at the short-term view. Because when you are in for the short stake, you may likely get yourself burnt. But when you're in it for the long haul, of course, you will actually get your capital protected, and not only being the fact that your capital is protected, you also get a lot of capital appreciation in your investments.
All right. So another trend we're checking is the year-to-date return in the equities markets. I know a lot of people are really seeing this as an impressive return. How impressed are you by this? What do you think it also means for investors and traders as we're looking at the trends, as you've pointed out, looking at the long-term trends, even medium-term that we've seen in recent times with Nigeria's stock exchange?
If we look at that, the stock market has been, I'll say, one of the market that helps investor or protect investors' capital this year. In a country where inflation is not of 24, for you to actually have protect your capital, you must have a return that is more than that 24%, and that's exactly what the stock market has presented to the table. It 3.22% is over. It's close to 9% more than the inflation. So it means that if you have invested even in the index, it means that you would have one way or the other beat inflation figure in this year. And aside that, also the Eurobond market also poses a lot of opportunity that actually help to actually protect capital, because the return on Eurobond, when you actually now translate to Naira, would have given you close to about a 45% return as well. So it means that both the Eurobond market and the stock market have been more like the destination for investment this year. that could have helped anybody to actually preserve capital this year. And for me, it's exciting that the stock market has really performed very well. It's exciting that Nigerians are now believing in the market, and also exciting that the market is becoming like the shore of all eyes.
All right, Oladipo, given the ongoing challenges posed by a weak macroeconomic environment, there seems to be some hope for those who are investing in equities, which we just talked about, especially when it comes to stocks with strong fundamentals. What are these fundamentals you think are really giving hope here? Because we see a large driving points for the record that have been broken by the stock exchange coming from equities a lot. So let's quickly look at that.
So, if you want to say, if we're looking at that view, the first thing we have to look at firstly is that you look at the fact that the law of fundamentals, some of the fundamentals is the huge revenue, aside revenue, most of them they've been able to adapt to the current situation and been able to minimize costs, and at the same time they have actually grown their bottom lines tremendously. Aside the banking names that you tend to see, maybe exchange rate gain that may not be something that you can easily replicate every year because of the change or unification of exchange rate, that actually move FX from 470 to 740 thereabout, that brought about that huge gain. Aside those the banking names, if you look at other sector, you would have seen that most of the driver is the fact that they are having strong revenue, and at the same time they are getting strong bottom line. Another thing also that we also want to note is the fact that most companies are now merging to actually consolidate into one, so that what that would do is to actually take advantage of the synergy that can bring to the table, the economy of scale that can bring to the table, and that will also help them to minimize costs and also improve return generally. And that's what we are seeing in that Dangote Sugar and NASCOM. And we expect to see more of this kind of transaction actually in the market. And by so doing, we expect market to continue to rally with such information coming to the market.
All right, so trading has started today, and I'm very sure there's excitement in the air because of these records being broken and records being set. What are we seeing in the first 1-2 hours of today's market for Nigeria?
Yeah, there's still interest in the banking names. You still see interest in Fidelity, interest in Zenith Bank, interest is also in GT Bank. And also, don't let us forget that we are still expecting results from UBA, we are expecting results from Access, and we also still expecting results from Zenith Bank. And these are key three tier one banks that you know that their results are always very excellent. And also is the fact that most of those banks are now paying, even the ones that don't have the history of paying dividend mid-year, already declaring dividend mid-year. For example, you look at Fidelity declared a 25 kobo initial dividends for their half-year result. And what that will also mean to most of other banks that have the culture of declaring initial dividends is the fact that we'll likely see a better dividend compared to what they actually been doing in the past. And what that will mean to investors is that it means that they will actually have better return than what they used to have in terms of dividend income.
All right, Prophet Oladipo, let's see if you can go 2-0. Should we expect to see another record being set in the coming days where it surpassed 68,000 as it is now? And 2008 keeps coming up as the year that other records were set and that we're now surpassing. I think add this answer together for me. What are some of the similarities you're seeing between what happened in 2008 and what's happening now? And are you ready to give me another prediction from your crystal ball? What do you think is happening in the coming days?
Yeah, I still think the market will still beat the current level in the coming years. Like I mentioned, we are still expecting results from some key tier one banks. We think that with those results, market will still rally and beat the result. And one thing, the difference between what's happening now in 2008 is the fact that now the market is based on fundamental, but then the market was purely based on speculation. So there are two different regimes. Now market is more informed. Then a lot of people just invest and speculate in the stock market, but now people only invest from knowledge perspective and based on fundamentals.
All right, so Oladipo, I think we might be back here whether on Friday or Monday to see if your prediction holds true. But you're going 1-0 now. You might be 2-0 very soon. And of course, that is definitely leading to excitement and, of course, more interest in Nigeria's exchange. Thank you so much for your time. Oladipo Ajayi, Head Fixed Income and FX, Chapel Hill, Denham. See you soon.
You're welcome. Thank you very
Fantastic.
much for having me.